Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Circuit City, Disrupting the Consumer Electronics Industry with Ronny Shmoel and Josh Siegelbaum. As a quick note, please be aware that Ronny and Josh will be answering questions at the end of the presentation. However, feel free to use the chat and Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we do have a brief disclosure to go through. 1 second. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass it over to you, Ronny and Josh.
Thank you, William.
Thanks, appreciate that. Let me just pull up our presentation slides here. Okay, let's get started. It's great to be here, presented to the Camaplan audience. My name is Josh Siegelbaum, Head of Investor Relations at Circuit City, joined by Ronny Shmoel, CEO and founder of the new Circuit City. We are disrupting the consumer electronics industry. Very excited to get into the presentation, show you what we're doing at the company, our plans for the future, and the opportunity that we have for investors.
Yeah, so my name is Ronny Shmoel, and I am really excited to show you the opportunity today on how Circuit City is disrupting the consumer electronic industry. So Circuit City is building the only marketplace that focuses exclusively on the trillion-dollar consumer electronic industry. And today we're going to show you how we're doing it. I'm proud to actually show our team, our super experienced leadership team in the consumer electronics space. Myself included, I've been in the consumer electronic industry for over 22 years and previously launched a brand in the consumer electronics space that became one of the top 500 e-commerce companies in the US. I'd also like to show you the extended part of our team and introduce Josh Siegelbaum to our webinar today.
Yeah, so as mentioned, I'm head of investor relations. I have 10 plus years of banking and private equity experience. Prior to joining Circuit City, I was the director of investor relations at an alternative asset manager, successfully onboarded over $50 million of capital in the last 2 years. Deep knowledge of private capital markets. Our team here is incredible. I'm really excited to have joined them and to spearhead this Series A funding round. So Ronny, why don't you tell the audience a bit about what happened to the old Circuit City, how big they were, and then what ultimately led to their demise and what the management failed to adapt to.
Absolutely. I'm sure a lot of people on this webinar today heard of the brand Circuit City. Circuit City was one of the largest companies in the US in the retail landscape. They were the #1 consumer electronic retailer for many, many decades. They did wonderful things in this space and industry. But their demise, happened because Circuit City was really stuck in their brick and mortar model and didn't really adapt to technology when in the early 2000s, leaders in the space really were pushing out in technology. Though Circuit City did at their height $15 billion in revenue, almost $2 billion online, but it still really wasn't enough as their business was really anchored in brick and mortar, locked into long leases. And again, as mentioned, you didn't really adapt to technology as some of the other peers that are out there, which gave us an opportunity. Looking back in the industry, again, mentioning I've been in this industry for over 22 years, not to age myself, specifically in e-commerce. My prior company, again, was one of the top 500 e-commerce companies in this industry. So I launched another company prior to this one, to Circuit City that was also a relaunch brand. And we really figured out how to excel, how to scale, how to grow the company into being a enterprise value company. And we're going to do the same thing here with Circuit City. The Circuit City brand is such a great brand. It's a brand I grew up with. It's a brand that we've always wanted to emulate in this space as they were the leaders. So to date, Circuit City only lives online. We are an e-commerce company only. We don't dwell in brick and mortar. So we play in the space of technology. And to date, since we launched in 2018, we have achieved over $120 million in revenue. And our business is focused on 4 different pillars of revenue verticals. And we're going to show you what those verticals are shortly. So to conclude where we're going on this slide, we're raising $25 million to scale, ultimately to become a multi-billion-dollar brand again.
And I'll jump in here, Ronnie, for a moment and go over the transaction summary for the Series A round. So the issuer is the parent company, Circuit City Holdings, Inc. It owns all the intellectual property, all the branding, all the rights to Circuit City and its logos, and of course, the operating subsidiaries that are revenue generating today. It's a $25 million capital raise. We have a $100,000 minimum investment at a share price of $5 a share. The pre-money valuation going into the round is $187.5 million. And the opportunity is open specifically to accredited investors. It's a Reg D 506C investment offering. So our solution is a curated marketplace experience. Ronnie will add some additional commentary on this, but the competitors that are selling consumer electronics products online and even other products, the selections are so flooded, and we're just seeing that consumers aren't given options and assortments that are specific to them. So we want to make a cleaner merchandising experience, making buying and browsing easier for clients to discover items that are important to them, social commerce to drive validation. And then from a customer service perspective, we have on-call experts that overcome customer concerns that can really walk clients through the shopping experience for these complex products.
Josh, just to mention, working on this project from the beginning, from the get-go, was extremely exciting for the industry itself. We really worked with a blank canvas, and we're able to craft such a strategy and learn from other categories that were doing it well. Think about like Wayfair and other categories that were really changing the face in shopping and digital experiences. And we're doing that with Circuit City. Not really working with the legacy company and their strategy. It really just allows us to paint the picture and grow with the consumer trends and demands. So as the evolution of shopping has really changed the face post-COVID, we're really growing with that segment, and we're really being at a stage and where we are right now, there's just really, it gives us just room for scalability. That's why we're really excited about this. We're going back to some of the older models, Josh, even to the point of having an in-house call team to walk a customer through the buying process, which is really great. It almost doesn't exist today, as you find the Amazons of the world, even Best Buy, they don't have their phone number posted anymore. So yeah, I'd love for you to describe the business models that we've cultivated through our strategies.
Yeah, absolutely. So what we do today are 2 core verticals that are revenue generating that we did the 120 million plus on was e-commerce and B2B e-commerce. So what we've done is we created a next generation e-commerce shopping platform, allowing buyers, both business and consumer, to discover new products and provide solutions to them and expert advice. There's also opportunity for IT services within these platforms, software as a service, and recurring revenue models that are really exciting that we intend on launching next year. But the core business of e-commerce product sales is live today and very much in full swing and on the upswing. Now, 2 new verticals that we're excited to present here are Powered by Circuit City and Marketplace. Now, Powered by Circuit City, through that, we're offering store-in-store partnerships with major national retailers, and we're also powering their online sales channels in the consumer electronics category. We're going to dive into this a bit deeper as we go into the presentation, but this is a really exciting space where we could really accelerate our online sales on our platform through these partnerships, and also have licensing opportunity to sell product in store and get extremely high margin licensing revenue on the Powered by vertical. Now, that's expected to launch in October of this year, our first partnership. Ronnie, do you want to tell the audience a bit more about Powered by and what we have upcoming for the brand?
Absolutely, Josh. We haven't publicly announced it, so you'll be the first to hear about Powered by Circuit City. We are launching our first retail partner, which is JCPenney. JCPenney operates 692 stores, and they have a tremendous online presence. They have roughly 50 million visitors a month on their site. So what we've done was, over the last 2 years, we really looked at the market holistically and reached out and spoken to senior level personnel in different categories of industries. Could be the hardware categories such as Lowe's, Home Depot. And we found that the department store would be our first deployment of this project. So Powered by Circuit City is almost proprietary to us, Josh. It is a unparalleled vertical that nobody really can do besides a brand like Circuit City. And I'll give you a little explanation of what really Powered by Circuit City even means. We basically leverage the brand, so we allow another retailer to utilize our brand on their website. So think about if you go to Macy's and you click on toys, you will now see Toys R Us, another relaunch brand recently. And it really becomes the face of an authoritative, call it an authoritative face forward category. So putting us on the JCPenney's website, which is launching imminently in October, we don't have to spend any money on marketing. All the derivative traffic comes from their existing customer base. And what we do is we actually place the categories and products that fit JCPenney's demographic, which is really cool. So again, putting us as a category authoritative, brand for that category, consumers are automatically instinctively know the brand Circuit City, know that we sell electronics, and they trust that over another department store's brand like a JCPenney or Macy's.
That's very right. I mean, this category, this vertical, Powered by, it seems so disruptive to me, and that's what really gravitated me towards this opportunity. And obviously, we're disrupting e-commerce and marketplace, but the whole Powered by vertical is just, it's such high margin. There's such scalability through these partnerships, and we're just scratching the surface with JCPenney. There's, as you see below, and as we'll dive into in a bit, there's many other potential partnerships in Powered by, and we're excited to launch that here this year. Now, the marketplace, that's expected to launch towards the end of 2024. We're building the only marketplace technology platform, and that's for third-party sellers in the consumer electronics industry to sell on our website directly to consumers and businesses. So each of these verticals has multiple revenue streams within them. So e-commerce and B2B, that's us selling products directly to consumers and business. As I mentioned, that's the core business today. Powered by, we're going to be exclusively selling products on other companies' websites, first being JCPenney, and then the licensing of the Circuit City brand for white label products that are sold within those retailers, brick and mortar.
Things like this, Josh. Things of this nature. This is a licensing product, so we're able to extend the brand out to a licensing partner, one of the largest in the country, and we are able to, for the company and its investors, add a lot of value with a licensing revenue model, which is really cool.
Most definitely. And then marketplace, as I mentioned on the last slide, bringing buyers and third-party sellers together, both B2C and B2B focus. And as you can see, and what you'll see in our financial summary towards the end of the presentation, each of these verticals has their own subcategories of revenue within them. So we have right about a dozen revenue categories between these four verticals that are going to be generating substantial growth for the business and its investors in the years to come. And as you can see on the right, substantial benefits for the company and its investors as well. So this is a massive market. Worldwide consumer electronic sales are expected to grow to 1.5 trillion by 2027, up from just 1.1 trillion this year. That's an astonishing growth rate, especially because the consumer electronic sales already had an extensive amount of growth in recent years post-COVID. The US market opportunity, total addressable market, is over $500 billion. And we intend on capturing just a portion of that overall market. Now, despite all of our shopping options, we as buyers struggle to discover new items. We're overwhelmed by too much choice. Think of when you run like a search on an e-commerce platform and you're just flooded with results. Many of those reviews are paid for. The self-service shopping experience is very challenging, particularly with high-ticket, complex products such as consumer electronics. It's just not a fun experience. And as illustrated in this quote on this slide, going into an Apple store, it's a great thing for some people, and it's a really cool shopping experience, but it's specific to Apple's products. And there's a whole ecosystem of consumer electronics products out there that are not Apple. And those shopping experiences are stale. Going into a Best Buy, it's not a new age experience. And they have a tremendous amount of sales that are shifting online, which we'll talk about later. But the shopping experience it's not guided. It's challenging for for customers in order to get what they want. And preferences are changing. They're going specifically online. So those who can dominate the online experience will succeed in this category in the years to come. And that's where Circuit City comes in. From a seller perspective, I talked about the buyers. Third-party sellers struggle to find channels to sell their products. So many rely on Amazon, as I'm sure many of you are aware of, and many of you shop on this platform. But a lot of the profit on Amazon goes directly to Amazon. The rev share and FBA fees, they can eat up margin for third-party sellers. These fees change frequently. They're not so much transparent. And then other platforms have a lot of strict friction, such as Walmart and Target, and they're just not cutting it for third-party sellers. So we're building a dedicated platform specifically for consumer electronics. We're teaming up with third-party sellers to create an exceptional online experience for both consumers and businesses. It's data-driven, value-added back-end services, lower fees for our sellers, and higher profits for them. And then there's cross-sell opportunities because we have other products that could be sold to these clients during their shopping experience on the Circuit City platform. I'm going to transition over to Ronny. He's going to tell you more about Circuit City Business. It's been a vertical that's been growing very steadily since we relaunched the brand. So Ronny, could you maybe give a bit of a background on B2B, the stickiness of those clients, and then we'll transition to the IT opportunity.
Absolutely, Josh. As speaking about Powered By, going back to that, another segment, of course, is Circuit City for Business. And in addition to DEC, we are highly focused on B2B side of the business. Most people don't think about Circuit City and think about the business side, but half of our revenue now comes from the business side. And the customers, if we're working with a small business customer that has either 1 to 500 employees, those businesses are more likely to stay with us through the lifetime of their shopping needs and services. So since COVID, really this whole landscape has changed. There's a great demand as businesses have adopted to work from home. We have really found an enormous path to grow in this segment. As mentioned, 50% of our revenue, and we've only been in B2B for roughly a couple of years now. And we have also found little competition to be focused on the small, medium business segment. Most of the large Office Depot, Staples, they don't really get into the weeds with businesses. We're looking for more solution-based rather than just product-based, and I'm going to show you what that looks like shortly. And the trend has been shifting. More sales from B2B has been shifting online. It is really at an infancy stage on how businesses shop right now, but more as people have become, I guess, comfortable working from home, they're shopping like regular consumers. But the average direct-to-consumer website doesn't really cater for a business. They don't really get into the business product end of it. They don't get into the service end of it. And we have found this is really, I could say, a goldmine of opportunity, especially for a brand like Circuit City. As most people, the derivative is they come in through the pathway of circuitcity.com. We have, our job is to identify these potential new business customers as segmented business customer. And then we have an in-house sales team that nurtures that relationship. And once we have crossed paths with this business customer, they're ours. We really form a business relationship with them and really service them properly. And we up to the point where we even listen to their needs. Most of them have said, hey, we can buy product anywhere. You guys do a great job on the product end, but we really are lacking on the IT side, getting the setup, continuing the service. And as COVID happened, the service business really changed dominantly, and it really became really difficult to get people to and perform regular everyday tasks on the job end. So we've developed something that is extremely accretive to value for the business and investors. And it's called IT as a service. So it's an IT SaaS model, which enables businesses to buy into a monthly subscription, which they can go up and down as their business throttles or declines in any format. And it is a serviceable model where they have 24/7 IT help. And any product that they buy from Circuit City, they can attach that product automatically to the back end, which is really cool. So this doesn't exist really. If you can't find this on Amazon, you can only buy product from them. Can't really find this on Staples or Office Depot. So we're finding areas in the white spaces and gaps in this industry. And it's really helping us scale and excel in our space.
Kind of pivoting over to Power Buy now, Ronnie. So, this such a large opportunity as we're talking about the consumer electronics space, but it's challenging for both brands and retailers for many of the reasons that you see on these slides. It's hard to gain market share for brands, being competitive on pricing. Many of them lack e-commerce expertise and they don't have the sales team that can get them on those channels. And then for retailers, in order to sell successfully online, they need to be fully built out. It's typically low margin, and you have to adjust pricing consistently. So there's a lot to it. So, and if these retailers are not a consumer electronics destination, it's very costly for them to set up this infrastructure, and it's not efficient from them from a business perspective.
That's right, Josh. And as I've spoken to leaderships from, let's say, Kohl's or Office Depot, they all kind of said the same thing in a different format. We know our customers buy consumer electronic products. We've sold them. We just can't figure out this category. So thinking about an economies of scale, we live and breathe consumer electronics on an everyday basis. We're dealing with the brands. If you think about a Samsung, we're going to be dealing with third-party sellers. We're able to just consolidate that and become the face of the consumer electronic industry. And it's not launching with a brand that nobody knows. It's a brand that led this category for decades and decades and decades. So retailers like it. Like I said, we're launching our first one. And it's highly scalable as well. Once we finalize our launch with JCPenney, it's really taking the tech that we built out initially, and it's pushing it out to the next retailer at this point. And every company out there, big, small, retailers that are doing well, they all want to attract new customers. They all want to service. This is a big one. They want to service their existing customer base. They don't want to lose customers. And they know that this category of consumer electronics is extremely attractive, right? So it doesn't matter what demographic we think about. Everybody's buying consumer electronics. If it's a Gen Z all the way to baby boomer, we all live and breathe technology. We need it for our personal and business use. So again, being in this category of consumer electronics, there's so much opportunity. We haven't included any of this in our, Josh will show you our future projections. As far as the opportunity goes, this alone would really be the opportunity of Circuit City. If we could take one thing and say, relaunch Powered By, it's enough to say that this would become an enterprise value company alone, just on this one vertical. But being in different verticals, Josh, I also want to mention that it also gives us the flexibility as we have different verticals to lean on in between each other as a business. So again, as you can see here, the landscape is large on the Powered By, and now we'll move over to our proprietary platform that we've built out, and we're going to continue to build out this ecosystem of platform. Everybody has been talking about AI and what it does, but we're using some of that technology to power the shopping experiences. And I'll give you a little brief description of what we are doing here. So we're building a proprietary platform that enables us to ingest, think about millions of products that are out there in this space of consumer electronics, and then match them up to the right channel. So we don't want to launch 1 million+ products on CircuitCity.com. We want to be more of a curated marketplace, e-commerce, digital online experience where you don't have 80 pages like on Amazon of a lightning cable for your iPhone or HDMI or pages and pages. So it's more of a curated process, which we have a good, better, best selection, but also a product that we have onboarded with a vendor may match better with CVS or a Ashley Furniture or somebody in that category that it resonates better with as far as price points, demographics. So this is a really, taking a technology approach to Circuit City really will enable us to be the most valuable of companies out there eventually. We really are confident about that.
Yeah, in terms of the competition, I mean, it's very thin on online success and expertise. Many of these are retailers. They're brick and mortar retailers stuck in their traditional model, and they have an online channel. It doesn't make up the majority of their sales, but they're locked into long-term leases, sometimes for 20 years. And for them to shift and pivot to be 100% online will be very challenging. And we're seeing preferences change. As we talked about earlier in the presentation, both business and consumers post-COVID, shopping experiences are transitioning to be online. And many of these retailers that are brick and mortar, they're seeing slower brick and mortar growth and higher online sales. And we saw that as well, a very big spike post-COVID that's been normalizing a bit. But we believe that the trend is in, and companies need to adapt in order to be successful in this market. And we're checking a lot of those boxes. And we believe that having a fresh start here with the right perspective, not being stuck in an old model, but focusing on the new, will allow us to drive the business forward and be successful on behalf of our investors as we drive this forward to a successful exit. So we are raising, got to skip a second. We're raising $25 million of growth capital in this Series A round, as I mentioned. This is the breakdown of the use of proceeds. You can see the bulk is being earmarked towards marketing and sales growth. So the goal is to acquire new customers, execute marketing campaigns, invest in lead generation, really beef up the revenue in our existing channels. We also want to launch the marketplace, of course. Operations would be the next largest here, investing in logistics, scaling operations, research and development, of course, business development. Tech development is key, investing in platform development and AI, enhancing our e-commerce and mobile experience, fully developing the B2C and B2B marketplace channels, and then building AI to further scale those powered by partnerships. And then in order to do this, we need key personnel. So hiring senior key employees, adding developers, scaling e-commerce, those are all be important as we drive this forward. Now, in terms of financials and where we expect this to go, here in 2023, we're anticipating top line revenue of just over 25 million. Net income, profitable, a couple $100,000 in net income on that. We expect both revenue and profitability to increase dramatically between now and 2028. We anticipate an exit through IPO, but this could certainly be an acquisition buyout type of opportunity, a larger player that wants to come in and scoop up the brand and all of its assets. We already, actually, prior to even launching this brand, Ronny and the team received several LOIs for acquisition before even doing any revenue here. So it's really, such brand recognition. We think it could be a great takeover target, but this is really an institutional grade investment. We think that Circuit City belongs back on public markets. That's our intention, to bring it there. So between 2023 and 2028, we expect to more than 10x revenue on the top line and substantially increase it on the bottom line. So we're expecting top line revenue from all four of these verticals to sum up to $264 million by 2028 and produce over $40 million of net income on that. So as we look towards the future and an exit opportunity, we see various potential paths for liquidity. We have successful traction, a really impressive track record, experienced team, worldwide brand awareness with Circuit City, diversification for our investors in various business verticals, a nice blend between those to make up all of our revenue. We're not heavily relying on one. So as Ronny mentioned, we have the ability to pivot if necessary and focus on what is most accretive to the business. It's a highly scalable revenue model, tons of growth potential, and brand recognition goes a long way. So Ronny, would you like to speak a bit about brand recognition and what we're seeing in the market as we relaunch this?
Yeah, I'll talk about this really quick here. I mean, almost everyone, gravitates towards a brand they know, even if it's milliseconds. If somebody's shopping on Google or anywhere else, if they see a brand, John's Electronics, Circuit City, similar offering, lo and behold, they will buy it from, most of the time, 99% of the time, Circuit City, only because, the brand has a connection, maybe a nostalgic connection to somebody that has seen the brand or shop by the brand. I've actually tested this out myself utilizing the brand in shopping. Circuit City has 2 to 3x higher shopping conversions than a brand that I positioned out there that nobody knew. So this is just makes everything just that much more an acceleration point. And Josh, you showed something on the projections. Achieving $265 million in revenue in 5 years is really not a lot for us. I got to tell you. My previous businesses, I've generated over $100 million in revenue. We're selling high ticket items. Our average orders are $500, $600, $700. So adding into the capital stack, it's really not difficult to achieve. These are conservative numbers. We really wanted to take a conservative approach to numbers just based on economic, outlooks and things that you hear in the market. This is extremely achievable for us. I'm all in on this, right? This is my day-to-day. This is what I do. So I just wanted to, have you note that for a moment. But we can move back to over to the brand recognition. Our marketing costs are actually less than any conventional e-commerce company in our space because of the brand recognition. So that means that we have essentially spent a lot less in marketing efforts in dollars than our traditional sister brand or somebody out there that we've in our competing space. And this is really being in e-commerce, but also having the success and being in the space of brands. The brands you see here are just a snippet of some of the top brands that have gone out, have been acquired, and relaunched in the last 7-8 years. Private equity groups of investors have spent really billions of dollars and continue to spend billions of dollars, as just we saw at Bed Bath & Beyond. A company called Overstock.com acquired just the brand trademark for $22.5 million. Public information. So I just like to illustrate here, the brand itself has tremendous value besides the operating company, right? So putting it all together, we really feel that this is going to end up being an enterprise value company. Toys R Us alone, Josh, was acquired a few years ago for $200 million just for the brand IP. And a lot of them have done very, very well already in this space.
No, that's great, Ronnie. I'd like to reiterate, I'm super excited about this. I agree with you that this is $1 billion plus enterprise potential in the future, especially if you look at these comps in the market. We expect to be heavily profitable on that $264 million. A lot of the competitors that are in e-commerce are trading at absurdly high multiples, even in today's soft market, very high multiples on PE, very high multiples on revenue. So we expect to really unlock a lot of value for the company and its investors. We'll turn over to Q&A here for anyone that wants to ask us anything in connection to the presentation. If you'd like to get in touch with us, we'd absolutely love to hear from you offline. You can contact us at investor.relations@circuitcity.com, or you can reach out to us by phone. This is my personal line, 609-610-8288. We'd be more than happy to speak individually offline after the Q&A session, set up individualized one-on-one Zoom calls with Ronnie and myself to dive deeper into anything, and hopefully could welcome some of you as investors in this Series A funding round that we launched this month. So with that, I'll turn it over to any Q&A, and then we'll wrap up the presentation here.
Great. Thanks for the presentation, Josh and Ronnie, so much. Like Josh said, please use the chat and Q&A function for any questions while we still have them live. The contact information is up there as well, but, I'd rather have the questions answered live if I were you. So, now's the opportunity to get started. You said when does the raise start? Did you guys already start?
Yeah, great question, William. So we're actually launched it this month. This is our first official webinar presentation that we're running. So you're one of the first groups of eyes that have seen this. We've, of course, passed the presentation to several advisors and key team members. But yeah, this is launching right now in September of 2023.
Oh, great. And this is a concurrent running investment. There's no deadline yet. You're going to see how it goes. And then if there's an opportunity for an exit, that's when it ends.
Yes, so we set a deadline of September 1st, 2024. However, we intend on filling it out sooner than that. So to your point, yeah, we'll see how it goes. But in my experience, having worked in private capital markets the last few years, I think that investor appetite will be very high for this, and we expect to fill it out pretty quickly. And we'd be more than happy to even offer some special terms for earlier investors that we could discuss offline for anyone that's interested in participating.
Great. And from what I remember, it was accredited investors, $100,000 minimum. Anything else that would be important for an investor that's interested?
Yeah, this is absolutely IRA eligible, self-directed IRA eligible. I have tons of experience working with Camaplan. They've been very easy to work with. So we'd absolutely welcome qualified and non-qualified funds. I'm sure that probably goes without saying, considering this is a Camaplan presentation, but I just wanted to point that out. So yeah, I mean, I think it's a great type of investment for IRA specifically, with the type of growth trajectory we're talking about, investing in that manner, in a tax deferred manner or a tax efficient manner, I think it's a great opportunity for investors to take advantage of in an IRA if they're able to do so.
Great. Thank you. Any other questions from the audience? Now's the time. People are a little shy, I see. They're still getting their typing hands warmed up.
Well, we're happy to answer anything. I just want to mention, since we've launched day one, comparable to other technology e-commerce companies, we've been profitable from day one. I think that comes from William, from the experience of the hand-selected team that I've assembled on the leadership side. Think about having Navy SEALs on your team, and we really are focused on shareholder value, profitability. That is one of the key indicators for us that we're focused on.
Yeah, that's very impressive, reassuring even. It looks like there are no questions from the audience. But this recording will be available. Oh, here comes a question. I spoke too soon. What is the plan for the next brand collaboration?
It's a great question. I'll mention this. The next one that we are planning on with the company that we're working with operates 1,100 college bookstores. Okay. They actually also operate 1,100 college shopping microsites. So think about nyu.bookstore. So that is our next planned focused launch. And what we've done was, we're focused on operating the online component. So it comes through the platform. We then place products on the third-party company site. But in store, which is really cool, which I really am excited about, we've partnered, as mentioned earlier, with a licensing partner. So we will have a net income of 6% of all products sold in retail of these branded Circuit City products, if you can see it here. And that's going to be, if you can, think about it, placed in these college bookstores. So that is our next focus and launch. And we're also, parallel to that, we're focused on, I can't mention who yet under NDA, but we're focused on the hardware space. So it's really one of the two that are out there, the two largest. Yeah.
Thanks for the answer. Thanks for the question, Corey. And I forgot, I'm not sure if you mentioned this. Did you have any plans for brick and mortar in the future, or are you staying e-commerce, commerce and B2B?
Great question, William. We're not focused on our own brick and mortar at all. It's not a model that we want to play in. We're going to stick to our core competency, which is e-commerce, technology, digital. It also places the company in a different value. I realized that as I was operating in the beginning, I'm like, wait, this is, we're not playing just because the brand had an enormous footprint in retail. We're not playing in that space. I just want to be very, very clear about that. We're not planning. This is not what we do. This is why we're partnering with retailers that are doing it well. Let them work on, let them focus on brick and mortar retail on that side of the business.
Great. Thanks for the clarification. It looks like all of the questions have come in, at least for now. If you guys have any closing remarks, that would be great. Every time I say it, what's they said the length of investment was that 5 years? I think you went over that. You said it was planned to
I'll let Josh
2028.
take this one. I see Jeremy, which thank you for the question. Josh, would you like to address that question?
Yeah, absolutely. Thanks for your question, Jeremy. So we modeled out a path for revenue and profitability over the next 5 years. And we believe that we want to unlock as much value for our early investors as possible. So we modeled it to 5 years to illustrate a path to 250 million plus in top line revenue, which, as Ronny mentioned, is very conservative and achievable. That being said, dependent on market conditions, we could certainly look to exit sooner. Our preferred exit strategy is to go IPO or similar public market transaction to bring this back to public markets as it was in the past. We're targeting 2028, but Ronny and I talk about this all the time. We've been presented with opportunities to IPO this year. People were presenting to us on trying to get us to pursue that. We thought it was too premature, and we want to better position the company for that successful exit. Not that it wouldn't be lucrative now, but yes, we modeled to a 5-year hold, but it could, depending on market conditions and how we do, we could certainly accelerate that.
Josh, I just want to add one point here. Such a great question because prior to launching in 2017, we received our first letter of intent for acquisition of the brand. Too early. In 2021, I like to talk about this. I guess I can within a scope of a private, group here. In 2021, we received a letter of intent from a family office in the tens of millions for the brand. And then in end of 21 to close to 22, we received a letter of intent from a competitor. And again, tens of millions of dollars in the LOI for the purchase of the brand. We just thought it was too early. We know that we're going to get this to a point where it's going to make sense for the company and its investors to exit. And yes, I think that the right opportunity prior to the 5th year, we will definitely have a liquidation of a sale to the right buyer, if it makes sense.
Perfect. Thank you, Ronny, for that, and Josh for your previous answer, and for the questions, Jeremy. Contact information is here. I think every time I say this, I think every question has been answered that people have so far, but the recording will be going out to everybody in the presentation today. And anybody who registered will also get a copy of the recording. So Josh and or Ronny, do you guys have any closing remarks to people that didn't get to ask a question live and then maybe watching this recording at a later date?
I just want to thank you for your time, William. Thank the audience for their time as well. I know we all have very busy days, and appreciate, even if you're listening to the recorded version or you're here live, you're interested in what we're doing at Circuit City. We'd love to have any of you alongside of us on the journey as investors. Feel free to get in touch. As I mentioned, contact information here on the slide, and I look forward to hopefully hearing from you.
Yeah, Josh, I just want to thank everybody as well who came on, and everybody who plans to listen to this session. And thank you, William, very much for organizing it.
Our pleasure. Thanks again, Ronny. Thanks again, Josh. Thank you to everybody who's in the presentation now and everybody who's watching it in the future. I hope everybody has a great rest of their day. Take care.
Yeah, take care.